financial fundamentals, number one, and I'll ask you the question, do you know your break-even point? I'm still astounded at how few builders know their break-even point. So what is your break-even point and why is it important? So let's look at the equation for calculating your break-even point. So quite simply, the break-even point equation is your fixed expenses divided by gross margin percentage. So what are your fixed expenses? So fixed expenses or overheads are those expenses that you can't allocate to a specific job. So it's like your office, vehicles, petrol, your marketing expenses. They're just general expenses that you have to pay regardless of whether you signed a contract. The opposite of that is a cost of sale. So those expenses, and by the way, these expenses need to be separate on your profit and loss. A cost of sale and them being separate allows you to work out a gross margin, which is part of that break-even equation, right? It's your fixed expenses divided by gross margin. But your cost of sales are those costs that you incur once you sign a contract. So it's the cost of a sale. It pretty much tells you exactly what it is. So you sign a contract, there's timber, steel, bricks, trades that you need to engage in, you pay their money. So they are expenses directly related to the job and includes your time, by the way, for supervision and project management if you're working on the job. All right, so let's do a quick example of a break-even. Let's say your overheads, remember it's overheads, fixed expenses divided by gross margin percentage. Your gross margin needs to be a minimum of 20%. Okay, and how do I know that? Well, I'm getting that from the Home Building Compensation Fund guidelines. They did the research. There are other factors that impact your ability to increase your home warranty limit, and obviously you guys go through that process every time you increase your insurance. And cash flow is a big one. In fact, more builders struggle financially because of cash flow than margin, but margin is one of the big indicators. Most guys are pricing way too low. So as soon as you go below a 20% margin, you get into a position where you're exposing your clients to risk. And we want to reduce the risk to your clients. So does the government, so the insurance companies. The insurance companies don't want to pay out, okay? Now, in order to achieve a 20% margin, you need to mark up by 25%. Okay, so we'll explain that in a sec. Let's just do an example of overheads of, say, $350,000. So let's say your overheads to run your business, which includes a wage for you, any admin wages for like a contract administrator, and again, your marketing, your office, your vehicles, all that sort of things, $350,000. All right. Now let's divide that. So you just punch that into your phone, then divide it by 20% equals. All right. So the break-even point or the volume of work that you need to deliver at a 20% margin to pay the $350,000 overheads is 1.750. So $1,750,000. That's your break-even point. Now, once you go past that, every dollar that you go beyond the 1,750, the gross profit, which again, if it's 20%, becomes net. All right. So say you turn over 2.5 mil. That's 750 grand beyond your break-even point, and you will then get 20% of the 750 as a net profit result. All right, so it's important to know when you start making money. You need to know when you break even. So when you're working at your break even, I recommend you do it over 12 months. Why? Because you have some expenses that are daily, some weekly, some quarterly, some maybe every 6 months, and then annually as well. You get your annual insurances. So if you get your overheads for a year, you're covering all your expenses. So again, this example is an annual figure. So if it's 1.750 for the year, we can easily work out what the monthly break even is, all right? So it's just a rough indication, because let's face it, January, December are half months, but that's 145,000 a month. Now, if you look at last month, how much did you invoice last month? If you invoiced, if your break even's 1,750 and you invoiced 100 grand, you're below break even. Right now, maybe you're going to invoice, 280 this month, and that's going to happen. You're going to have ups and downs, but it's important to have a metric like that, a monthly invoice amount. So we'll talk about that in more detail later, and I'll give you an example of one of the builders I'm working with. But that's the break-even equation, all right? Fixed expenses divided by gross margin. Now, when you pricing, all right, let's talk about that and achieving the 20% margin. I don't recommend, guys, when you're pricing jobs, and work with me, you know this, that you include any overheads in your pricing. All you need to do is work out your cost to do the job. So your materials, your labor, your trades, including your time for project management and supervision, all right, at an hourly rate weekly allocation. Once you've got that raw cost, you mark up minimum 25 to achieve a 20% margin. Okay, now if this markup margin thing is confusing, don't stress about it. You don't need to understand it. Just know that it needs to be at least 25. All right. So if we use an example of your costs for the job being 100 grand, if we mark up 25,000, the total quote's 125, the profit's 25 grand. That 25 as a percentage of 125 is 20%. All right. If you're a client of mine, your margin needs to be 25, so your markup 33. So it'd be 100 plus 33. And that 33 as a percentage of 133 is 24.9 or 25%. And if you achieving a 25 margin, which you all should be now in this market, because again, supply and demand, right? There's more demand than there is supply. You should be edging towards 30%. A 30% margin is a 42 markup, right? So there's the markup margin equation. Again, minimum 20% margin to offset the risk to your clients. You're doing a favor to your client. All right. Let's look at the seven-figure club, because a lot of the guys I'm working with now, you know, this is you. The goal is to get into the seven-figure club, which is to net $1 million over a 12-month period, off wages but before tax within 3 years. And about a couple of guys already do it within 2 years. And then once they achieve that point, it's not just making $1 million a year and then not being able to replicate that. All right. So you don't work 80 hours a week, achieve the $1 million, and then just fall over on a heap on the floor. You want to be able to have structures and processes so you could take someone, and this is the goal for some of the guys I'm working with, is to get it to that seven-figure club point within 3 years, have the operations manual running like a well-oiled machine, and then get a young bloke, put him in either as a partner, like a minority partner, or profit share, so that they can then open a development arm of the business and go from there. So the sweet spot to achieve the seven-figure net profit result is a 6 million turnover at a 25% margin with $500,000 overheads. So it's easy maths. If you look at 25% of 6 mil, it's 1.5. That's the gross profit. You got to pay overheads. If your overheads are $500,000, you got 7 figures net profit left over. All right. So just to recap so far, because I am going quite quickly, and if this is new to you, like if you're not a client of mine and you're hearing this for the first time, just go back and listen to it multiple times. Okay, so we've spoken about break-even point, why it's important, what the equation is to calculate your break-even point, and then looking at the seven-figure club sweet spot, your pricing strategy, having a minimum 20% margin, which is a 25 markup. The next thing, which is hugely important, is your cash flow. All right, so I spoke about how, and this I've got from one of the best bookkeepers in the country, that more guys are going out of business because of cash flow than any other reason, all right, or walking away from their businesses. So if you look at the profit wheel on the screen now, you obviously recognize there's a lot more to running a successful business than just the finance side, which we talk about now. But without the finance bedrock or foundation, it doesn't matter what you're doing with the rest. You'll just market yourself out the back door. You get the best marketing, the best sales, the best team. If you don't know how to price your work, if you don't have sufficient margin in there, you're gone. Okay, so really, really important. The quick and easy way to fix your cash flow is to have a cash flow positive payment schedule. All right, so we've got an example where on $1 million job you got 14 payments. So I'm happy to send that through to you. If you want a copy of that, just email me again, kurt@builderscoach.com.au, or if you're a client of mine on our next coaching call. But quite simply setting it up, and I heard this from one of the lawyers from one of the major associations, head lawyer, again, take the deposit, progress payments to cover the job. Otherwise, cost plus jobs, which, if there's any complexity, there's no way you can do a fixed price job with more provisional sums or PC items than go cost plus and make sure you're getting, at the very least, every 2 weeks, you're getting progress payments coming in. But that payment schedule is hands down the number one thing you can do. And just bear in mind, if you're using an HIA contract, it's got Form 1, Form 2. Form 1 can't be used. And this is coming from the head lawyer at the HIA, who made it very clear that Form 1 was created in 1983 and those building practices are now outdated. So do not use Form 1. You have to use Form 2, which is create your own payment schedule. Obviously, some of you are thinking, what about the banks? Screw the banks, okay? The banks have a duty of care to their shareholders, not to you. They will watch you crash and burn every day of the week. And I can tell you right now, yeah, hot off the press. I know Sam and Danielle, you'll be smirking right now. Sam pushed back recently, and hopefully you have too. When the banks said, "Oh, we want it this, payment schedule should be this way." Firstly, the banks don't know anything about building, and secondly, if you listen to them, they're going to send you insolvent, and you're going to be trading out the back door. So you need to push back and say to them, "Look, we have a duty of care to our client," because remember, if you do trade insolvent, if you got cash flow issues and you're financing your job, you're putting your client at risk. Okay, and that's written in the Home Building Compensation Fund guidelines, right? Clear for everyone to see. So don't listen to them. And also bear in mind, the banks already agreed to a loan amount. They've already agreed to pay the money out. Now they're just arguing about when they pay it out. So 99 times out of 100, they will not walk away from that business, because you and I both know how much money they make, right? All right, so enough said. So there's cash flow sorted. Boom, one thing, one solution with that payment schedule. Then there's monthly invoice amount. So I spoke about how, if you've got a break even for the year, which was in the example previously 1.750 divided by 12, it's 145 grand a month. We've got one of our guys, their goal is $1 million a month. All right, so they're striving for $1 million. We had a look recently, it was 750. Not $1 million, their break even 650. So they've passed the break even, which is okay, but not on target for the $1 million invoicing. Bear in mind, what you invoice for the month is different to what hits your bank account. So you can choose to look at either one of those. But we want a simple metric, right? A very simple metric, like how much did you invoice for the month? So you don't have to go and do any deep financial analysis, and the accuracy is going to be easy. You're going to be able to check. In fact, do it now. Straight after this call, or even pause now and go and look at what did you invoice last month? What about the month before that? And then based on what you've got programmed or scheduled in, what's coming up next month, all right? What these guys do, they look at why did they only achieve 750 and not the mill? Was it things outside of their control or within their sphere of control? And they found that carpentry was slowing things down, which would probably be relevant for a lot of you guys. So based on that, they built a solid team of carpenters in-house with a lead carpenter who trained the other guys, and that helped improve efficiency in that area. Maybe it's your job scheduling tool. Maybe you're not programming the jobs well enough for the guys on updating the daily log. So there's things that you can look at to improve efficiency and achieve your monthly invoice amount. But if you don't have a number, you can't manage what you don't measure. You've got to have some sort of number that you're striving for, and then you can extrapolate from there and look at what specific actions you can take upstream to make sure that you achieve that number. Now, obviously, there'll be some things you can't control, but if there's no timber, there's no timber, right? However, you could potentially look at jobs, and I was having a conversation yesterday where there's a lower proportion of carpentry. So you can start marketing or targeting those jobs, because we all know there's no shortage of work, right? So maybe you can start doing the type of work that's not going to be have better efficiencies, and it's going to better suit your team and your location and everything else. Right, so I think you guys get the message there. Next thing is a 12-week cash flow forecast. So spoke about cash flow forecast as did the guy in the MBA article, looking at a 12-week, week-by-week cash flow forecast based on your payment schedule. So what money's coming in, wash that up against all your outgoings, both fixed expenses and your cost of sales, and that'll give you your net cash position. Right, we need to know what your net cash position is. Why? Well, so that we can see, well, it should be increasing all the time. Your margins should be strong, but if it's not, it's going to alert you to the fact you need to fix it and fix it quickly. But if things are going well, which it is with you guys that are working with me, with most of you, you'll be able to forecast when you need to build or improve both your team and your system. So maybe you're gonna put a new system in, like Procore or Buildertrend or Companion Systems, whatever it is. You want to time it. You want to do it. You don't want to wake up and go, oh, we've got more jobs on than we've ever had. Oh, we need a scheduling tool, a better scheduling tool, or we need another supervisor. That's too late. You want to be able to see it 6 or 8 weeks out, like a windscreen that you're looking forward through, so that you can start the recruitment process, which, by the way, most guys are jumping on Seek, Indeed, Gumtree, LinkedIn, and also their socials, as well as using agents to get guys from overseas. I've got at least half a dozen guys looking at a particular agent down in Melbourne who's bringing in guys from the UK. When I say guys, carpenters, supervisors, they convert their trade over to Australian standards, and then they're using those guys. I'm assuming you could do the same for your Kiwis that are listening as well. So 12-week cash flow forecast and revenue projection. Those of you that work with me, you have your revenue projection that aligns with your sales process. if you follow the sales process, that 6-step process, which you absolutely need to, anyone listening, if you want to copy, I'm happy to share. Again, I'm here to help. I want to use the information that we have and share it. We like open source, so sharing so that we help improve standards in the industry, but also help avoid the casualties that they predict are coming. Okay, the wave of casualties. All right, so the revenue projection, you can pretty much bank the numbers if you follow the sales process, because we outperform those conversion rates in that revenue projection. But the revenue projection, which just looks at what's in the pipeline based on prelims and cost analysis signings. So if you're not charging for quotes, why the hell not? We've got guys charging for site visits now, so that's crucial, and that again helps you with your workflow. So you can see there's profit and cash flow on the screen. The third Achilles heel is your workflow. So even if you booked out for the next 12, 18 months, what do you do beyond that? How do you know you're going to continue to have work? And without going down that rabbit hole, the solution is having a client banking system, building an email marketing system, as well as a following on your socials, having a content library that sends out a consistent pulse on those platforms, your socials, and also like a monthly newsletter with quality video and photo content, right? People fall in love, they come to you, they've already decided to work with you before you've even met them, and you have a backlog of those people. So 100 coming at you, you can only work with 10. That's what you want, and you want to outsource the overflow. All right, so that's how you get workflow that's consistent at a high margin with strong cash flow. The cash flow part is when you demonstrate that you're good at what you do, people are going to follow your lead. All right, they're not going to question what you do. If you're unorganized, you're all over the map, which sadly is a high percentage of guys right now, people lose trust very quickly, and that's why the industry is struggling with a lack of trust and a bad reputation in so many areas. All right, guys, so the next 12 months is absolutely crucial. If you're missing any of those areas that I just covered off, it's really important that you put them in place. Come to me, I can help you with it myself personally. Otherwise, I can point you to someone else who can. Two more things just before we wrap up on the financials, and then I'm going to get to going through the Builders Coach news for those of you that are on the Builders Coach program. Debtors control system. So having some form of debtors control system where, if someone misses a payment a few days late, you send them a friendly reminder. We've all had it happen. If you're late on your phone bill, they get an email saying, hey, you probably overlooked this, please pay it. And then there's another email that goes out if they still don't pay it, and it gets progressively more stern, so that it's crucial in this day and age that you do that, and you stop works immediately if money's not coming through. There's also scripts you can use. So you can give someone in the office to phone just to chase that money up. I mean, if we're busy, obviously other people are busy as well, and sometimes, most of the time it's just them having overlooked it, or maybe something's gone to their junk folder. So make sure you got a debtors control system, and then profit first. So those of you that work with me, you'll know that on day one, we make sure you set up some accounts with dollar cost averaging, so automated weekly payments into cash accounts, offset accounts, index funds, crypto, whatever it is. And then every 6 months at least, you review those accounts and you either increase the number of accounts or the amount that's going into them. And that's how you stack cash and build, retained earnings, working capital. So these profit first accounts I'm talking about are over and above your provisional tax accounts and any other cash that you're building up. There should be at least 2% of each progress payment going into a cash account as retained earnings. And that's, again, based on the Home Building Compensation Fund guidelines, right? So when you do insurance, they're going to be looking at that. All right, guys, so I've gone through this quickly. There's a bit of work there for you to put in place. No doubt there'll be some gaps that you need to work on. The number one way for you to leverage in your business right now and get best practice systems put in place quickly and well is how? It's through other people. So don't ask how to do it. If any of this is confusing, ask who knows how to do this and who knows how to do it well. So you can contact me direct. Again, I can point you to people who can go and you can set up all your financial systems, your bookkeeping system. And with today's systems and technology, cloud-based stuff, you can have lots of reports and information that's accurate at the click of a button. So get in touch, make sure that at the very least you have these things that I spoke about working well for your business so that you can get through the next 12 months and the next 2 years. And if you do get through, it's not just about surviving, but if you do sort of tie the knot at the end of the proverbial rope and hang in there, get through this period, you will absolutely dominate and thrive out the other end. Because there are a fair number of people who are going to go away.